Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX500. So thank you guys for joining. Thank you for taking your time. And today we have quite a lot of things to cover. I believe the most important thing is processing what happened last night during the FOMC press conference. So besides that, we'll have two central banks that are about to make an interest rate decision later in the day. That is the Bank of England as well as the Swiss National Bank. So we'll be trying to cover that, understand what are the expectations. Then later on, we'll do technical analysis for the major currency pairs, do technical analysis for the major stock market indices, commodities, and once we are done with that, we'll cover a Q&A towards the end of the session. And after that, hopefully everyone will have a peaceful day. So as usual, I would like to begin with a disclaimer that this is not investment advice. It's not a recommendation to trade. So always do your own due diligence and practice proper risk management. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So I'm already seeing some good comments here. So I'll go through them. Morning, Apollo. Kindly show us how to read the Fed dot plot and interpret. How does one tell the number of rate cuts? That's a good question. Morning, Lamik Buire. Morning, Edward, Tony, Caspar, and Brian. Thank you guys for joining. Manthi, welcome. Hello, Ibrahim. A good question, can I trade crypto on currency like Euro USD and others in FX500? Good questions. I'll be responding to them as we progress. So let's get things started. So the very first thing I want to talk about is what happened yesterday during the FOMC press conference and even before that. So the best article I've seen online, I've covered quite a number, is this one from CNN. So the title is Key Takeaways from the Fed's Rate Decision and Powell's Press Conference. So the Federal Reserve held its key interest rate steady on Wednesday for the fifth consecutive meeting as the central bank awaits more data to determine when to cut rates. So the current rate is a range between 5.25% and 5.50%, which is a multi-decade high. And at current rates, it's considered high. And as the Fed mentioned yesterday, is that there's there's a very high likelihood that the Fed is not going higher with interest rates. So with US interest rates at 5.5%, it means that the bond yields are also significantly high, and this is attracting out of capital to US bonds. But then on the other hand, it's also crashing other economies' currencies, especially currencies of economies in the global south. So with interest rates this high, the Fed expects that this is significant to or sufficient to tighten the economy, or basically remove the excess liquidity in the markets, and as a result, control prices and push inflation back towards the 2% target. So the Fed has raised rates aggressively over the past 2 years in a bid to fight the highest inflation in decades. But while Americans continue to deal with high interest rates and inflation, Fed Chair Jerome Powell said the central bank is still not ready to lower borrowing costs just yet. So we have been trying to speculate on where the direction of interest rate cuts will start or when it will start pivoting. And this is a decision we have been waiting for almost a year. So there has been projections from Fed members, and what they do is that every 3 months they will submit anonymous projections, and from these projections they'll see what they're expecting to see in terms of inflation and interest rates over the next 3 months, and they keep repeating this process every 3 months. So when they do this, it gives the market a projection or an expectation of what is about to happen. So at the beginning of the year, all the Fed members had a majority vote, basically showing that they're expecting to do 5 rate cuts within the year. However, since the Fed has been data dependent, meaning that their decisions are based on the data coming from the US economy, what they have been doing is reducing the expectation. And in the last meeting, the expectation was 3 rate cuts. So as per this meeting, we were expecting to see the expectation dropping to 2 rate cuts in 2024, but they maintained that there is a high likelihood that they will continue holding interest rates higher, but then they will consider 3 rate cuts towards the end of the year. So out of the Fed's 8 meetings in a year, 3 are already gone, so 5 meetings to go, and 3 of them are expected to experience rate cuts. So that was the key takeaway for yesterday. So economic growth is expected to be much higher this year than officials estimated. So the expectation for economic growth was adjusted higher to 2.1%. It's too soon to know if inflation has stalled. So Powell said we continue to make good progress in bringing inflation down, but it has become evident that there are some persistent price pressures in housing and the services sector. That could be worrisome for the Fed as it faces the final stretch of its historic inflation fight. Rising shelter costs and a sharp climb in gas prices pushed up consumer prices in February, according to the latest consumer price index. So this is one key thing to consider. If the Fed is complaining that gas prices went up and in return pushing inflation higher, then it's time to consider what happened in the oil markets over the last 1 month. So if you check your charts, you'll notice that oil prices have been going up, and now we have something very important to consider, and that's the direction of oil prices. So within the month of March, we have seen oil prices move from around $81.8 per barrel to 85.9 and potentially $86 per barrel. And that's a significant rise in oil prices. And as a result, we should be expecting to see consumer prices rising in return within the US, which tends to be an indicator of high inflation. So if the Fed is not winning the fight against high inflation, and its approach is data dependent, and the data is showing more pressure to push prices higher, then it leads to the expectation that inflation might remain significantly high for the current quarter and possibly the next. And as a result, it means that there's a good chance that interest rates may stay higher for longer. So economists like to look at data over several months to strip out any noise or month-over-month fluctuations and make sense of any durable trends. That's how the Fed is approaching the current situation with inflation, waiting for more data to know if inflation has indeed stalled. Powell added that there might have been some seasonal effects that skewed the data for January. Asked about the role of rising shelter costs in pushing up inflation, Powell said there is some confidence that the lower market trends we are seeing will show up over time, but there is a little bit of uncertainty about when that will happen. So the Fed is in wait and see mode. Basically, the Fed has hiked interest rates at the fastest rate ever in the last 2 years. And now that interest rates are high, they were expecting that inflation would behave the same way it was doing last year. But somehow it has remained sticky this year, basically rejecting the prior trend. It is consequential, Powell said. Fortunately, with the economy growing, with the labor market strong and inflation coming down, we can approach that question carefully and let the data speak on that. Powell said officials want to feel more confident inflation is headed towards the central bank's target of 2%. Wednesday's policy statement also made that clear. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably towards 2%. So what this means is that if inflation remains sticky or high, especially above 3%, then the Fed will not be in a hurry to cut interest rates. So this means that the Fed's dot plot projections over the next meeting could potentially reduce the potential for rate cuts by to 2 rate cuts rather than 3 as reported yesterday. So the economy remains on strong footing. America's economy remains solid by many measures and in Powell's own view. The economy is strong, the labor market is strong, and inflation has come way down. Economic growth in the first quarter is expected to register at a healthy 2.1% annualized rate, according to the Atlanta Fed's latest projection, following 2 straight quarters of growth above a robust 3%. So a strong economy is not within the Fed's expectations. The Fed expected to weaken the economic growth in order to control prices. It expected to increase unemployment, or basically weaken the job market, and that would help the Fed achieve its 2% inflation target. But then the economy has remained strong. We have seen the job market being really tight, and at the same time, we are seeing energy prices also going up. So these indications are not consistent with the Fed's expectations. So as a result, the market is betting against the Fed. So while the Fed is considering, let's say, 3 rate cuts by the end of the year, the market is heavily questioning that. In fact, based on what we saw yesterday, the market is actually ignoring the Fed, and that's why we are seeing asset prices basically moving higher. So in traditional or previous cycles, whenever the Fed went for very strong rate hikes and kept interest rates high, the overall reaction in the market would be a strong dollar and a weak stock market. However, what we are seeing in the market is strong numbers. So we are seeing the Dow Jones, the SP500, and the Nasdaq all hitting all-time highs. We are seeing gold prices hitting all-time highs, while the dollar is currently very strong. So yesterday there was a strong sell-off in the dollar index based on the 3 expected rate cuts. But then early this morning, we are seeing the dollar making a very strong recovery, especially against the Japanese yen, a currency that just experienced a 20 basis point rate hike, which happened earlier in the week on Tuesday. So with this in mind, let's look forward and see what we are expecting for the day. So from the economic calendar, you can see today being the 21st of March on Thursday. The first data point we got is GDP from New Zealand, basically indicating that the New Zealand economy has officially entered a recession. So remember how we defined a recession? It's a scenario where an economy contracts for 2 consecutive quarters. So in the last quarter, we saw a negative. This was around 0.3%. Then in the last quarter, that is the last quarter of last year, then the economy contracted by negative 0.1%. So it's not a major recession, it's more of a technical recession. So when the economy contracts for 2 consecutive quarters, then you have an official recession in the economy. So it has happened to many economies this year, including Japan. We have seen it happen to Germany, the UK, and so on. So Australia jobs report came in strong at 116.5K. This was way high compared to the previous reading of 15.3K and the expectation of 39.7K. So what this means is that the job market is currently very tight. The economy is strong and creating more jobs. And this is not very good, especially for the Reserve Bank of Australia that has been looking to slow down the economy in order to achieve its inflation target of 2%. So from the previous reading, the inflation in Australia was 4.1%. So they still have a distance to cover. So sorry for that. Just realized I wasn't sharing that. So this is the GDP for New Zealand, down 0.1%, in the previous quarter down 0.3%. The job data on 16.5K. Then we look at flash manufacturing PMIs. This is an S&P global report. So it will be there for the Eurozone, for the UK, as well as for the US. But then the most important data point for the day will be the 2 central banks making interest rate decisions. So the first interest rate decision will be happening 15 minutes from now, and this is from the Swiss National Bank, where analysts are expecting that the S&B will be holding interest rates steady at 1.75%, but there's a 30% chance that the S&B may consider cutting rates. So Switzerland is one of the top economies that has been able to achieve its inflation targets. So Switzerland managed to push back inflation to below 2%. and it has done that for a couple of months consecutively. So the potential for Switzerland cutting interest rates remains significantly high. So if it cuts interest rates, then this means that they have won against inflation, and this is expected to weaken the CHF. So we could be seeing a strong rally in USD CHF if the S&B considers cutting interest rates. So it may not cut, but then the S&B press conference becomes the focus. So if it comes as expected, then investors focus on the S&B press conference to see the projections for rate cuts. So this will be very important to see if the S&B is looking to make rate cuts later in the year and how many of those rate cuts will be there within 2024. So next thing is the MPC bank rate votes and the official bank rate decision for the UK. So the Monetary Policy Committee of the UK will be making an interest rate decision, and this will be at 3 p.m. So the current interest rate is 5.25% in the UK, and we don't expect a change. So we expect that the UK will be holding interest rates steady at 5.25%. So the MPC bank rate votes are very important in this scenario. So we want to know how the members are voting. So there's 9 members that often vote on the interest rate decision. So in the last meeting, we had 6 members voting to hold interest rates steady, 1 member voting for a rate cut, and 2 members voting for a rate hike. So it's in the triple X format. The first number is how many MPC members voted to increase interest rates. So as per the last meeting, 2 members are voting to increase interest rates. So the second number is how many voted to decrease or cut interest rates. So there was only 1 member. And then the last number is the ones who voted to hold interest rates steady. So in that case, we had 6 members voting to basically hold rates steady. So there is a speculation that the members who are going for a rate hike have shifted and gone for holding interest rates. So in this case, we expect a majority decision of 8 guys voting for holding interest rate steady and 1 voting for a rate cut. So if we happen to see this and majority are holding interest rate steady, then this should be very bullish for the GBP against other pairs. But then we also be focusing on the monetary policy summary. So investors will be trying to establish the direction of the UK monetary policy, and we could get some hints from the monetary policy summary. So if the UK is confident that it's achieving its inflation targets, then we could be seeing some hints about rate cuts this year. But then if the UK is not very confident and it doesn't talk about rate cuts, then as a result, we should be seeing a very strong GBP, and that could be a nice pair to nice currency to pair with weaker currencies. And in this case, I would consider something like the JPY. So pound yen could be a big mover at the 3 p.m. news. So towards the end of the day, we get the flash manufacturing PMI and services PMI for the US, and this will be at 4:45 p.m. However, I believe that the central bank decisions are happening this week carry more weight than the S&P global announcements. So for instance, today, the prevailing market movements are majorly dominated by last night's FOMC decision. And of course, we'll be seeing more coming from the CHF as well as the GBP. So common pairs to think about is CHF against the yen, the pound against the yen, and the US dollar against the yen. Then the pairings between these 3. So in this case, the USD CHF currency pair and the pound USD currency pair. So that being said, I believe it's time now we start focusing on what's currently happening on the charts. So from the charts, I will be trying to understand what happened yesterday, what is expected to happen today, and then from there, hopefully, we'll be identifying the best opportunities in the markets. So just a second. I'll be starting with the dollar index. The dollar index, I think, has been the most clear one. So early in the week, we had this sideways momentum before a break. Then the market went higher. And then on Wednesday, short even higher before we got the news from the FOMC that led to a big sell-off in the dollar index. However, since this morning, we started with a big spike downwards. Remember, this was during the open of the Australian session or the Sydney. Then as we enter the Japanese session, we have seen a recovery, or basically the dollar index erasing all the losses it had made earlier in the day. So now we are about to enter the London session. And in this case, I expect the dollar index to continue recovering because there is no indication of rate cuts, especially when you consider the data in the US economy and what the Fed Chair Powell is trying to achieve. So while he may be talking about the potential interest rate cuts, the data is arguing otherwise. And investors can see the data and they understand that the direction we are taking might potentially lead to interest rates staying higher for a longer duration of time. And that means a much stronger US dollar. So I expect to see the dollar recovering today. And we could be seeing that, especially in USD yen, where the early sell-off that had happened during the Sydney was recovered during the Tokyo session. And now the previous trend high could be achieved towards the end of the day. And this is a level of 151.798 Japanese yen per dollar. So we could be seeing a continuation of this trend and the market making a full recovery from the last night's sell-off. So this was the panic during the news. But now as investors continue processing the data, then we know that the Fed may have to hold rates higher for longer. So as for the Euro USD, you can see the big rally that happened yesterday, but yet we didn't yet see another all-time high. So what we are seeing is the market now respecting a new trend line somewhere along here. So the new trend line is indicating that the Euro USD is forming lower highs. So from this high to this high to this high, then it's an indication of a market that is forming a completely new trend. And in this case, it's easy to identify. So from this, you can see the market is forming lower lows, lower highs, which is indicative of bearish momentum. So in this case, I would be more inclined to think that the Euro USD is headed back downwards, with the dollar regaining its strength after investors realize that the Fed will have to hold rates higher for longer because inflationary pressure is not going anywhere. So for pound USD, it's a similar thing with Euro USD. So if you compare this from the previous high to this high, and then from this high to yesterday's high, sorry for that, then it's still a lower high kind of scenario. And it basically shows a trend where the market is now consistently moving downwards. So if you look at the most recent lows in the market, then in this case, this is what it looks like. And there's a good likelihood that the pound continues losing to the USD. However, I wouldn't advocate for trading the pound USD right now until the Bank of England makes the interest rate decision, and that's later in the day at 3 p.m. So this will be a very interesting pair because if it happens to strengthen the pound, then we could be seeing the market going for this level, the previous high, 1.28906. And if we happen to see a weakening pound, then the market could potentially go back to the previous low. And this could be a nice opportunity to either go long or short, depending on the outcome of the news. So USD CAD, we are seeing the market maintaining the same channel. So earlier in the week, we projected that the market will continue with this journey and potentially hit the previous high. So once we hit the previous high, there was a retest and the market now dropped all the way back down. So now the dollar is making some form of recovery after hitting this bottom here. So notice the coincidence of this bottom with the bottom that we saw this morning. And now the dollar is basically strongly reversing the momentum yesterday. So we could be seeing now the market headed much higher towards the previous high, and this could play out for the day. So we don't have any major news for the Canadian dollar today. So in this case, the focus for this particular pair will be on the S&P Global Flash Manufacturing, as well as the services PMI data later in the day. So gold, I've been telling you to be patient for the better part of the week and last week. So we eventually broke out of this flag. And as you can see, anyone who was patient, they were nicely rewarded. So we managed to hit over $2,222 per ounce of gold. So after the breakout, if you go to a smaller time frame, let's say 15 minutes chart, then it was clear from here. After the strong breakout here, then the rest was easy, an easy play all the way up. And now what we are seeing after the momentum yesterday is some form of sideways momentum forming some form of flag. So today I'll be observing these areas here, trying to understand where the market might be headed next. So these are consolidation down, up, remaining within two trend lines. So we can say that the overall momentum is following this path here. And eventually we'll have a breakout. So it's more about being patient and waiting for the market to at least make a strong breakout. So for now, we observe this area of consolidation and wait for the break to give us a direction. A break higher, we go longer, and a break lower, we go short. And with the recovering dollar, I believe there's a good chance that the breakout will be on the lower side, and it could take us right back to the breaking point. So potentially dropping to around 21.54. So I don't know this yet, so we just remain patient and wait to see what the market might do next. So US equity indices, the Dow Jones and the SP 500 all formed a new all-time high, but the Nasdaq did not make a new all-time high yesterday. So having crossed around this area, hadn't hit a new all-time high. So today we have seen the continuation of the bullish momentum, and now we have just hit a new all-time high. So compared to the previous new all-time high, we haven't had much of a momentum upwards. So this represents some form of profit taking. Once the market hits a major resistance and you see an instant pullback, basically means that there's a lot of profit taking and short sellers attempting to enter at that price level. But then judging from the daily time frame, you'll notice that there's 4 consecutive days we have had a strong rally in the Nasdaq, and I expect to see some form of continuation. So the idea here is to observe the next hour of trading. So if we see some further downside momentum or a confirmation of reversal, then we go short. But then if you are looking to go for a bullish position here, you have to wait for the market to break the 18,420 price level. So if it breaks this area, then you identify the entry point and go for your bullish position. So the next 2 hours will be very critical in determining whether the Nasdaq is proceeding higher with this momentum or whether it will be reversing. So from the Dow, you can see very strong momentum yesterday, forming a new all-time high. We don't have candlesticks on the left. So in this case, we might have to use the upper trend line as a targeting mechanism. And the upper trend line, following the last couple of weeks, seems to be following this path. So it's a predictable outcome here from the Dow. So anytime the market is on a bullish momentum, it seems to be finding resistance along this area. So now, if you check this, you'll notice that there's more room for upside. So if I now contract the chart, then there's a potential that the market continuously rallies and gets to at least 40,000 price level. So it seems like a nice round number to target. So the potential for the market hitting this area is significant. So there's still more room for upside. And for the S&P 500, it's a similar case. We are seeing a very strong bullish momentum. And I'll try to identify a similar momentum in a similar path. So it's reasonable enough to say that every time the market gets to this trend line, finds resistance, and now that the market has been moving up, there's a good chance that we could be seeing that become the resistance for the S&P 500 somewhere around 52.76. So we could be seeing the market extending this rally and getting to 52.76 before making a pullback. So Brent oil has been pretty strong with a very good rally. So we had a breakout here, a retest and a continuation. before erasing some gains yesterday. But as we know, we had some data coming from the IEA, and that was the crude oil inventories. So as per last night, the crude oil inventories, just confirming, came in at negative 2.0 million barrels per day. Negative 2.0 million barrels compared to the previous reduction of 1.5 million. So if inventories have reduced by 2 million barrels, it means that oil is more scarce, and that tends to be bullish news for oil. So in this case, the expectation is that prices continue moving higher, and that should give us a reasonable expectation that oil prices will recover from the recent pullback. So we had a pullback here yesterday and some form of recovery. Today there seems to be an attempt to move higher, but I believe it's short-term volatility. At some point, there should be a continuation of this bullish momentum. So from the daily chart, this is how it looks like, and our target area was $87.755 per barrel. So the market got close but did not get to that area. This was the target area here, and there's still more room for potential bullish momentum, and the market gets to the $87.755 price level. So the Euro 50 cash index managed to form a new all-time high yesterday. But then from the price action we are seeing in the last 2 hours, it's enough to tell us that there is a strong entry by sellers. So first candlestick attempted to go up, closed lower than the open, forming a shooting star. And now we have a confirmation, but the candlestick has not closed yet. So if we have this close, then the analysis from my side is that the price action of 2 candlesticks was able to erase the gains that we had earned from 5 candlesticks. So this means that there is a very strong entry by short sellers, and this means that there is a good likelihood that we continue seeing lower prices for the rest of the day. So it's the same for the French 40 index. This one with a very nice book pattern. It's called what? Trying to remember this one. It's the opposite. Yeah, a dark cloud cover. So the market is showing an exhaustion gap. This was the closing of the price yesterday. So the market gaps up and then closes lower. Then today continues with this strong bearish candlestick, indicating that it exhausted the bullish momentum, and now we are seeing a very strong bearish momentum. So it's a very rare pattern formation, but it's usually a very strong sell signal in this case. So there is a good chance we'll be seeing some more downside happening in the French 40 index, and hopefully we will be able to capture this, and it seems likely that it may be the chart of the day. So USD against the Swiss franc, we've just had the data, so I'll be confirming this. This is a USD CHF making a big spike after the interest rate announcement. So in this case, I'll be checking this real quick to see the outcome of the data. So just pardon me for a second. Nice. We have a 25 basis point rate cut, and this is good. So I already projected this earlier in the presentation. I said there's a good chance that the S&B will be going for a rate cut. So the rate cut is here with us from 1.75% down to 1.50%. So with that in mind, then it makes sense why we are seeing a strong volatility. And there is a good chance that we will be seeing more volatility in the CHF pairs for the rest of the day. So how do we process this information? It's a surprise rate cut, though some investors already expected it. So let's see how we think about this. So a surprise rate cut means that interest rates are going down. They're done with the fight against inflation. And now they are pushing interest rates back downwards to support economic growth. So that tends to weaken the currency. So in this case, pairing with a stronger currency tends to be the obvious take. So from what we are seeing with USD CHF, it's a very strong rally. that is pushing prices higher, and the next immediate target seems to be much higher than this. So I'll be checking this area here to see if it coincides with other areas, and true as it may, it seems like this is our target area. So I want you to identify this area here acting as support, this area acting as resistance, and this area acting as another resistance. So in this case, the expectation is that the dollar continues gaining against the Swiss franc, and with a direct stop somewhere around 0.91014. So these are clean buy, expecting to see even higher prices. But as always, and I keep saying this, if there's a big news announcement, don't take a much bigger risk than you would otherwise take. So a better way of handling this is by making sure if you normally trade, let's say, a lot size of 0.5, then you go to 0.1, and then you'll have a wider stop loss, basically protecting your account and not suffering from the volatility. So this way you can take advantage of the news using smaller lot size, not taking a significantly bigger risk. So I believe that's the key movement for the day. But of course, you can use other pairs to target even higher prices. So you can already see the volatility, and I expect that this big surprise will lead to a much bigger price movement. So there's still more room for upside. So that's the end of the session for today. Let's start with the first question from Apollo. Show us how to read the Fed dot plot and interpret. I will have to prepare for this. So let's do this on the next session. That should be on Monday. I'll do it. So it's a dot plot. It's basically an average of how many members voted for this versus that. So kind of like the triple X formation from the BOE rate votes. So next question, can I trade cryptocurrency? If you're on MT5, it's there, it's available. What does it mean for the dollar when Fed holds interest rates steady and explains massive weakening of the dollar during FOMC meeting? So sometimes there will be the immediate reaction in the market, but later on the market will process and understand what's going on, and then the market will correct itself. So in this case, despite the Fed announcing 3 potential rate cuts for the year, the data is stating otherwise, and the dollar is making a recovery. So in this case, we are actually processing the news and identifying the real long-term direction is that the dollar will continue being strong, and as a result, we are seeing the recovery happening as we speak. Finally, the gold breaks the bull flag. Yes, we have been discussing this for the better part of the week. I hope you are able to capture that. Please analyze Euro Audi, Pound Audi. I think they are derivatives. I wonder why you'd be preferring the quiet ones when you have a better one. But all the more, we can check one out and skip the other just to save time. So we have a big sell-off in Euro Audi. It seems likely that long term, we have had this, and I'm using a top-down, just a very simple analysis to identify where this might be headed. So we are looking at 2 points on the bottom here, this support and this support. And that now from there, if you go to the 4-hour chart, we are approaching a key decision point. So if you had a short selling position, this would be likely an area you'd be wanting to exit your short selling position as you wait to observe the momentum to see if it breaks or bounces from here. So there's several times the market has done the same on this area here and on this area here. So in this case, I would be very patient, waiting to see the performance of price action here, whether there will be a bounce or a break. So if you had a short position, exit. And if you are looking to make a market entry, be patient to see if it's a break or a bounce. So just observe the candlesticks hour by hour to see what happens at that level. So from the 1-hour chart, this is how it looks like. So just be patient and wait for the eventual price action along this trend line. How does the news coming out affect Euro USD? So there's usually a very positive correlation between the Swiss franc and the euro. So if the Swiss franc is losing, then the euro is also expected to be losing. So in that case, take the Swiss franc as a currency that is almost a sister to the euro. So in this case, if the Swiss franc is going down, like you are seeing with USD CHF, then we should be seeing the similar thing with Euro USD. So it's clear, you can already see it happening. The euro is also losing to the dollar. So we have already done the analysis here. So potentially going to the Bank of England, no change in bank rate is likely. Do we sell the pound on the principle of buy rumor, sell the news? The interest rates in the UK are still significantly high at 5.25%. And with inflation high, then the Bank of England could potentially hold interest rates higher for longer. So with this in mind, it basically means that there is a good chance that the pound strengthens after the meeting, and potentially we could be seeing the pound gaining against the yen. But now we have a candidate, pound CHF. We have a very weak Swiss franc. So if the pound strengthens, then it's easier to pair it with the Swiss franc. In addition, I saw Fed economic projections showing an expected core PC inflation of 2.6. Does this mean Fed will cut interest rates before inflation hits 2%? So this is the one contentious thing we had yesterday. So while Jerome Powell over the last couple of meetings have been consistent with the message that they are not changing the inflation target, there seems to be a political pressure in this case to cut interest rates into inflation. So we don't know what he will do. So it seems more likely that he will continue holding rates higher for longer, because if he cuts interest rates into inflation, then that becomes inflationary, and now they have to start fighting inflation all over again. Of course, the Fed is not stupid. They will basically consider holding rates higher for longer, for as long as it takes until inflation gets reasonably within the 2% target. So even though they have these projections, which they keep changing every month, there is the real data coming from the economy. And in this case, it's more reasonable to assume that the rates stay high for longer, and potentially maybe even one rate cut or even zero towards the end of the year, judging by the trend from 5 expected rate cuts to 4 to 3, and now potentially to 2, and we could even get 0. So following that trend, it means that there's a good chance we will be seeing rates staying higher for longer, and that means a stronger dollar against other currencies. I don't think it's any wise to cut into inflation. So thank you for the response, Caspar. I did not understand BOJ rate hike and subsequent weakness of yen. What did the bond buying comment mean? So the Bank of Japan has been holding interest rates negative at negative 0.1%. They just hiked by 20 basis points, which is a small amount. So remember, for the US, we were getting 75 basis points every meeting. That was last year. So now for a small 20 basis point hike is not that significant. So the key significant news was basically scrapping the yield curve control program, meaning that bond yields can now be allowed to move higher. That would create demand for the Japanese yen. So that was positive and was supporting a stronger yen. But then the additional information was that the Bank of Japan has been conducting what we call quantitative easing, which is basically printing money to support the economy, and it's not about to stop. So they said they will maintain the same rate of printing money and buying bonds as well as other risky assets in the market. And as a result of that announcement, what we saw is the market basically questioning the Bank of Japan's resolve to tighten policy. So this led to a much weaker yen. So as long as you're printing more money, there's no moving around it. Thank you, Manabasto. Thank you for another educative session. What is the symbol for the dollar index in FX Pesa? The dollar index is USD index M4. So notice that this changes every month because it's a futures contract. So in this case, it will be expiring on 14th June. So not every month, every 3 months. So in this case, you'll have to find the new future. So in this case, USD index M4 as of today. How comes BTC did not make the rally done by gold? I believe you are wrong on this one. Gold rallied about 2% yesterday. If you look at the rally that happened with Bitcoin in the evening, we are up about 6.68%. So just focus on the percentage. The rally in Bitcoin was much bigger than the rally in gold. Patience, the name of the game. Hello, Rufas. FOMC was quite dovish. Should we anticipate a short-term dollar weakness? Thanks for USD, CHF, and gold analysis on Wednesday. So thank you. I'm happy that you benefited from this. So to all those attending, kindly feel free to like the video. It really helps me a lot. And of course, if you can just take the link of the live video and share with other communities, be it Telegram, WhatsApp, or social media, this is really helpful. It basically helps other traders reach this information. So to answer your question, the short-term dollar weakness happened yesterday, and today we have already started seeing recovery. So the markets know that the inflation is not going anywhere. The indicators are there. Oil prices are indicating very strong bullishness. The job market is tight. The US economy is strong. So with all these data points, it basically points to a situation where interest rates may have to remain higher for longer, which is positive for the dollar. So thank you very much, everyone. Thank you for your time. And I hope to see you on the next session. Remember, there's a new episode of the Bullish Banter podcast available on all podcast platforms. And at the same time, if you're a beginner trader, just go to FX Pesa YouTube, search for Novice to Pro, go through the beginner course. And if you are trying to start your trading journey, then you should find links below for registering for a live account. Thank you, guys. See you then. Oh, I almost missed like 5 questions. So if the that's a lot of questions. I think this will extend to 1 hour. So if the maximum price has been reached in bullish trend, is it in order to get in a sell bearish trend or vice versa? I wonder what you define as maximum price. In these markets, there's nothing like maximum price. If there's a bullish trend and people are riding it, they will ride it for as long as they can. So if there's a strong bullish momentum in the Nasdaq and we have a new all-time high, there's a good likelihood there will be a newer all-time high. So don't oppose or fight the trend, just follow the trend. Should we expect the dollar to hold off the rates at 5.5% for even longer? Yes, that's my speculation for today. I think I've mentioned it several times. I can't seem to find liquidity on the buy side for USD JPY. Should we take some shots? Personally, I would advise against that. The overall long-term direction for USDN is upwards. So any form of pullbacks are taken as a value entries. What does the price spike very fast? How fast do people process the data and make the decision? Well, it's not everyone who is trading manually. There are people using bots, and others are even using AI. So that's why it's not advisable to trade during the announcement, because there can be a lot of volatility. So just process the information at your own pace and then go for your trade. Another one, BTC rally, gold breaking new highs, but BTC on a hot appears to be a bullish flag. Yes, Bitcoin is on a bullish flag, so there's still more room for upside on BTC compared to gold. Today's session helped me learn about those foul moves during the news. I have seen also it follows the technical analysis. Thank you, Malombe. What does this statement mean? Swiss National Bank eases monetary policy. So easing monetary policy basically means cutting interest rates, or sometimes if there was QE, it basically means cutting quantitative easing. Since the Swiss bank doesn't have any form of QE, in this case, they went for a rate cut, and this means that they are making capital cheaper. So if you are in Switzerland, loans will be much cheaper by 25 basis points, and this is done to stimulate economic growth. And as a result, it increases the supply of currency, making the currency weaker. That's why we are seeing a weaker CHF. How long have you been trading? And what has been your biggest trading lesson and discipline? I think it's all patience, risk management. That's it. Patience, risk management. As per my career, it's more than 10 years. A good question from Lamik. Why am I patient when my trades are in losses, yet I'm very nervous and impatient when my trades are in small profits? So I would recommend a book called Trading in the Zone by Mark Douglas. So what you need to fix is the way you think about the markets and the way you think about yourself in the markets. So the thing is, in this game, the best loser wins. So the best loser wins is the key to this trade. So you need to be the best loser, meaning that you're more concerned about your losing trades. And if you have some losing trades and they go past your limits, you basically exit rather than hold on to losing trades. And then you let the upside take care of itself. What pushed you to trading forex? Personal interest. I think I was born for this. Trade other industries, they didn't work for me. So thank you very much, guys. See you then.